Welcome back. The Securities and Exchange Commission partnering with the Commodities Futures Trading Commission on Project Crypto in an effort to align federal oversight of digital assets. White House officials meeting with crypto industry executives and bank associations yesterday to help break the impasse holding up the Clarity Act. Participants also calling the talks constructive, but crypto representatives said that they felt banks were slow to engage, reportedly. The major stalemate, as we've been talking about, is whether crypto exchanges and crypto companies should be allowed to offer customers rewards, money, on stablecoins held on crypto platforms. Joining me now is the chairman of the CFTC, Michael Selig. Mr. Chairman, great to have you.
Glad to be here.
Thank you so much for being here. And let's start at the beginning in terms of how you are delineating the difference between a security and a commodity. Because in this market structure bill, you're intending to classify tokens as securities versus commodities so that we have clear jurisdiction. Walk us through it.
That's right. For too long, we've had the Gary Genslers of the world regulating by enforcement, claiming that every digital asset is a security. And Chairman Paul Atkins and I really disagree with that view. We believe that most crypto assets in the markets today are commodities. These are digital assets that maybe were issued as part of a securities transaction, but they trade a lot like oil, gas, and other commodities in our markets. And the information that is prevalent to and important to trading these assets comes from the markets at large. It's not coming from a single source of information, as you see with the capital markets with an issuer. And so we need to build markets that allow for these assets to trade with clear rules of the road, and we can't regulate by enforcement anymore.
What was your takeaway from the meeting at the White House yesterday and this sticking point in terms of banks versus crypto platforms and paying rewards?
Well, I understand that it was a very productive meeting at the White House, and the president's leadership is really critical in getting this legislation across the line. He's been a real advocate of the crypto industry, and I know that we've got a large swath of incumbents that are concerned that some of the legislation could encroach on their lanes. But really, I think this legislation is going to move us all forward as Americans. It's going to create a new standard, the gold standard, if you will, for crypto markets here in the United States. And, you know, these issues are ones to be worked out amongst the Congress and the president's office, but I think we're going to get it across the line.
So when would you expect the timing? Is that a February-March situation, getting it over the line?
We're hoping for that. So thanks to Chairman Boozman's leadership in the Agriculture Committee on the Senate, we have a bill that's moving through. We have a bill that passed the Clarity Act in the House. And so we just need to get this done in banking. And I think Senator Tim Scott's going to get this thing across the line with the president's help.
And of course, the initiative also outshined the passage of the Senate Agriculture Committee's Digital Commodity Intermediaries Act. Talk to us about that.
Well, there's a number of pieces of legislation here, and really the goal is just to get some clarity. It's been too long with these markets just languishing, and they've fled offshore. Our country's best builders, entrepreneurs, and innovators are really, for the first time, looking at a system where we can have clarity, clear rules of the road, a token taxonomy, so we know what's a security and what's not. And that's going to move these markets forward. That's going to create a new paradigm here in the U.S., and we're really excited to welcome the builders back to the United States.
Well, it's really interesting to me that you've taken on also these prediction markets. I mean, when you look at these prediction markets, it's incredible how much activity is there at Polymarket and Kalshi and others trying to get into that game. What's most important for us to understand about these prediction markets, and how do you see your role?
Well, these markets aren't new. We've been regulating them for over 20 years. We've seen, since the early days of our markets, a broad swath of new types of commodities over the years. And that's the great thing about the CFTC, that we are a regulator that's always been focused on innovation in our markets, new types of commodities, new products, new platforms. And prediction markets are no different. We support lawful innovation in these markets, and we're going to create clear rules of the road for the markets. We're not going to be a merit regulator, as the prior administration sought to do, and ban these types of contracts ahead of a political election. We're going to embrace it. We're going to set the rules for the road, and we're also going to defend our authority in court where necessary.
So what are the rules of the road? We just had the chief legal officer of Coinbase on, and, you know, of course, they have launched prediction markets in all 50 states.
Yes.
What are the rules of the road in the prediction markets?
Well, these are derivative instruments. So these are binary options that are regulated by the CFTC. They're unlike wagering, which we saw in state casinos and in the states. And that's fine activity. commodity that's regulated at the state level. These are different products. So at the federal level, when you offer a derivative contract, you offer an option, there are very clear rules that you have to accord with. You have to offer it on a registered exchange, CFTC registered exchange, and you have to make sure that the contracts that are listed are not readily susceptible to manipulation. And there are other guidelines and standards. So unlike a bet you go and place in a casino, these are contracts that you can get in and out of. They're liquid. You're able to settle by offset. They go through a clearinghouse. So it's a very different product. And I think this dispute amongst the states and us, it's going to come to a head. But these are very different products. It's no different than insurance and credit default swaps. Same economic considerations, but very different products.
So the CFTC's decision to withdraw both the proposed prohibition on political and sports-related event contracts and the related staff advisory removes an overhang, right? I mean, do you think that this is still going to be an issue?
Well, this was a politically motivated rule proposal. It happened right before the presidential election, which if we follow the prediction markets, they are more accurate than a lot of the polls out there. And it's an important check, I think, for democracy to have these markets in place. We're seeing them used in the sports area through live broadcasts. We see it in newsrooms. We see deals between news media and prediction markets. And so this is a market that we need to have here in the United States because otherwise it'll be offshore and we have no control over that. So we plan to withdraw, as you mentioned, the Biden-era rule proposal. We plan to withdraw staff proposals that really created confusion in the market around sports products. And we plan to set new, clear rules of the road as to what sorts of contracts are legitimate and what sorts of contracts we are going to allow in our markets.
All right, let me go back to the Clarity Act and of course, the Senate Agricultural Committee's passage of the market structure bill. Advancing expanded CFTC authority over digital assets was something that was well needed. We need to actually see the rules of the road. So where is this going? When would you expect this legislation to get back on track?
I expect in the coming months to have a bill on the president's desk for his signature, and I'm a huge supporter. I think the work that's happening in the Senate and the work that happened in the House really is going to make the United States the gold standard, and so I do expect in the next couple of months to get this thing across the line. So
is it fair to say that the CFTC's oversight is going to be overseeing, in addition to what you've always done in commodities, et cetera, but some of these non-traditional markets?
The CFTC is a unique regulator. So we've had the Securities and Exchange Commission since the 30s. It's regulated capital markets. The CFTC is a newer regulator. It came about in the 70s. And ever since its origin, it has been a regulator that's regulated everything from pork bellies to credit default swaps and now crypto and prediction markets. And it's not afraid of these new markets. It regulates through principles-based rules and regulations, unlike some of the more prescriptive regulators where they have set standards. We allow for innovation. We're more flexible. And this is the perfect regulatory framework for new markets as they emerge.
What are you expecting in terms of the appellate results on the Kalshi-related cases?
Well, we're expecting to defend the CFTC's authority in these actions. The CFTC's authority over prediction markets is very well settled. The definition of commodity includes just about everything except for onions and motion picture box office receipts. So we have very broad authority there. And we have authority contemplated by the drafters of the Commodity Futures Authorization Acts to allow us to regulate all manner of commodity markets. To the extent that there's a commodity, we have authority there and we'll defend it. And we do expect to win these cases.
And so do we have draft language in place at this point in terms of the CFTC's event contracts and oversight right now?
So the CFTC currently has certain rules in place around these products, and we've allowed them in our markets. So we've seen contracts on sports events. We've seen contracts on the recent election. And there's really just a Cambrian explosion of these products, thousands of them being certified each day. And of course, we do not evaluate every single contract. We have the ability to evaluate them as they're coming through, but they're self-certified, so they're not approved on a one-by-one basis. But that's really our authority. That's another reason the CFTC is a modern leading regulator, that we allow for the markets to move quickly, and we come in the back end and make sure that we have rules and regulations in place.
So do you envision sort of a product mix shift, sort of away from just like, sporting, from sports and toward more macro policy and a broader economic contracts type situation?
Well, the wonder of our markets is there's so many types of products that people might want to trade, and so we're not going to be a merit regulator and say you can trade this product but not that product. We will allow for our markets to innovate, and we will come in and make sure that there are rules and regulations around that. So rather than have the Wild West and ignore this and just allow it to kind of languish here or there, we're going to set real clear rules of the road so that the United States can lead in innovation and have really the markets that we've come to expect in securities and commodities now in our prediction markets as well.
And one of the big issues, as you say, is China, right? I mean, overseas. I mean, by the way, we've seen deals go overseas, whether it's Dubai or Asia. A major concern is how the U.S. protects its exchanges from Chinese companies as well. I mean, look, China's our #1 adversary. We've got all these Chinese companies traded on U.S. exchanges. What's your take on that? I know that the president has lots of levers to pull with regard to his own dealings with Xi Jinping and China, but how do you ensure that, in fact, the #1 player in the world is the United States and not communist China on all of this?
Well, it starts with clear rules. We've got to make sure that we're evaluating what's in our markets and what's coming from offshore, and we need to surveil and police those markets. So we're looking at all options on the table, but we want to make sure that America leads and we're not subject to China's activities offshore.